Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, July 29th, 2025, Bitcoin is at the center of attention, with a flurry of news pulling it in different directions. While some reports indicate Bitcoin recently surpassed the $120,000 mark, other breaking news from A-Invest highlights a retreat to $118,900. Noting a significant $1.2 billion in Binance Whale inflows that are oddly pressuring the critical $110,000 support. This suggests large players might be moving assets onto exchanges, potentially for selling. Adding to the mixed signals, we've seen ARKB and BIP ETFs experiencing net outflows totaling $32.2 million, indicating dampened investor appetite for some innovation and blockchain-focused funds, likely due to ongoing regulatory scrutiny and broader market volatility. However, in a contrasting development, the Grayscale BTC Trust recorded an $11 million net inflow, suggesting a shift from actively managed thematic funds towards more passively managed, direct Bitcoin vehicles. SEC delays continue to affect new crypto products, such as Trump's Truth Social Bitcoin ETF, keeping a lid on some speculative momentum. While big adoption news like PayPal enabling over 100 cryptocurrencies for merchants paints a bullish long-term picture. It is important to note that the detailed hourly and 15-minute chart data we have currently available ends on July 11th and July 26th, respectively. So our analysis will focus on the trends leading up to these points and infer impacts from the most recent news. Let's begin by looking at the daily chart to grasp the broader market structure. On the daily chart, looking at the entire historical data set, we can clearly see Bitcoin has been in a strong long-term uptrend, marked by higher highs and higher lows. This consistent upward momentum has pushed BTCUSD into uncharted territory, creating new resistance levels as it climbs. A key area of past resistance that turned into support was around the $70,000 psychological level, which held multiple times throughout the earlier part of the year. Let's narrow our view to the price action since November 2024 to see the most recent surge that led to the much-talked-about new highs. Focusing on the period from November 2024 to late July 2025 on the daily chart, we observe a significant bullish push that took Bitcoin from roughly $70,000 to over $110,000, eventually touching highs near $123,000. Specifically, on July 14, 2025, Bitcoin hit a high of $123,231.07, establishing a new all-time high. This strong upward movement, characterized by large green candles and increasing volume, reflects robust bullish sentiment and substantial accumulation. The recent news of Bitcoin surpassing $120,000 confirms this major milestone, aligning perfectly with our chart data's peak in mid-July. However, after this peak, we've seen some consolidation and a noticeable pullback. The candles in late July show price struggling to sustain levels above $120,000, with increasing upper wicks indicating selling pressure near these highs. The last full daily candle on July 28, 2025, closed at $118,005.11, confirming the retreat mentioned in today's news. The $115,000 to $117,000 zone appears to be a developing short-term support area based on previous price action and the recent low on July 28. A break below this would likely see price testing the next significant support around $110,000, which aligns precisely with the A-Invest news about whale activity pressuring this level. Now, let's switch to the one-hour chart to examine the short-term volatility and how these broader trends play out in finer detail. We'll focus on the data leading up to July 11th, which is the latest available for this time frame. Looking at the period from July 8th to July 11th, we can observe Bitcoin consolidating after a strong rally. Notice the high-volume spikes on July 9th, around 1900 hours Universal Time Coordinated, when price dramatically rose from around $109,500 to over $112,000, confirming the sudden upward moves that characterized the overall daily uptrend. Following this sharp ascent, the price enters a tighter range, trading primarily between $115,500 and $116,500. This narrow range, coupled with lower relative volume in subsequent hours, suggests a period of short-term accumulation or distribution as traders digest the prior large move. The $115,500 level provided strong hourly support, with price bouncing off it multiple times. Conversely, $116,500 acted as overhead resistance. For short-term traders, recognizing these intraday ranges is crucial for scalp trading or setting tight stop-loss orders around these levels, anticipating either a breakout or a breakdown from this consolidation. Moving to the 15-minute chart, we gain an even more granular view of price action, focusing on the data available up to July 26, 2025. In the final hours captured by this dataset, specifically from July 24, 22:26 Universal Time Coordinated to July 26, 15:56 Universal Time Coordinated, Bitcoin showed signs of minor fluctuations within a relatively tight range, oscillating mostly between $117,000 and $118,500. This very short-term view reveals rapid reversals and short-lived breakouts, indicating a choppy trading environment rather than a clear directional bias. Notice the candle on July 25, around 3:11 Universal Time Coordinated, where price dropped to $115,383 before quickly recovering, showing rapid short-term buying interest at lower levels. For high-frequency traders, identifying these minor support and resistance levels like $117,000 and $118,500 is essential, as bounces or rejections here could offer quick scalping opportunities. Volume analysis on this time frame is also key. Spikes in volume during upward or downward moves can signal conviction, while declining volume during price consolidation might indicate waning momentum. Given that our 15-minute data cuts off on July 26th, any intraday trading decisions on July 29th would require current, real-time data to confirm these short-term trends and support/resistance levels. Now, let's tie this all together with the very latest news and look forward, acknowledging the data gap from July 26th to the current moment on July 29th. The CNBC report of Bitcoin briefly touching over $120,000 is significant, showing persistent underlying bullish demand, even if it was short-lived. However, the A-Invest report indicating a retreat to $118,900 and pressure on the $110,000 support level suggests that immediate selling pressure is high. The mention of $1.2 billion in whale inflows to Binance, coupled with price pressure, implies large holders might be liquidating positions, or at least positioning themselves to do so. If the price breaks decisively below the $117,000 to $115,000 support zone observed in our charts, the $110,000 level becomes the next critical psychological and technical support. A bounce from $110,000 would be a strong bullish signal, reinforcing this as a major accumulation zone, potentially leading to a retest of the $120,000 to $123,000 highs. Conversely, a sustained break below $110,000 with high volume could signal a deeper correction, possibly targeting the previous significant support around $100,000. The contrasting ETF flows, with active funds seeing outflows but the Grayscale Bitcoin Trust seeing inflows, points to a maturation of the market where investors may be shifting from speculative, actively managed crypto exposure to more direct, passive Bitcoin holdings. This long-term shift could be a net positive for Bitcoin itself, even if short-term ETF performance seems mixed. Regulatory news, especially Crypto Week in the US and SEC decisions on ETFs, will continue to be a major catalyst or headwind. Positive regulatory clarity or approval of new spot Bitcoin ETFs could ignite another rally. Conversely, stricter regulations or rejections could trigger further sell-offs. To recap, here are the key price levels and important considerations for BTCUSD. The all-time high achieved around $123,000 remains a strong resistance target. Immediate overhead resistance levels are around $119,500 and $120,000. Current trading is focused around the $118,000 mark. The immediate support zone to watch is between $115,000 and $117,000. The most critical short-term support, mentioned in the news, is at $110,000. For short-term bullish sentiment, Bitcoin needs to hold above $117,000 and preferably reclaim $119,000 quickly. This has a moderate likelihood of 55% if no further large sell orders materialize. If it breaks below $117,000, a test of $110,000 is highly likely, around 70% probability, especially with continued whale selling pressure. A strong rebound from $110,000 would reinforce long-term bullish sentiment, making a retest of previous highs and a push towards the predicted $160,000 by year-end 2025 a 65% possibility if positive regulatory news also emerges. However, a decisive break below $110,000 carries a 40% chance of a more significant downtrend towards $100,000 or lower. Beyond price action, keep an eye on incoming economic data for July 2025, such as U.S. non-farm payrolls and inflation figures, as these will heavily influence risk-on sentiment for cryptocurrencies. Also, monitor any further news regarding regulatory decisions, particularly around spot Bitcoin ETFs, and watch for continued shifts in institutional investment flows between active and passive crypto products. Understanding these dynamics will be crucial for navigating Bitcoin's path in the coming weeks and months. Thanks for tuning in to Explain the Charts, and we'll see you in the next one.